Hey, been a little while, hasn't it? Alright, so let's get into it. So basically, as you saw from the title, I'm going to talk about the trade war, the impeachment, and the markets. Surprise, surprise. So over the last few weeks, we've had a lot of changes with the trade war. Market's gone a little haywire, like it usually does with the trade war. So what we're going to see here is we're going to see increased volatility because of increased uncertainty. I've been saying this for almost a year now. Over a year, probably. And because of that, the market has been going up and down, but it had a little drought or a little decline at the end of November. But it's recovering now. Aside from that, like, who knows what's happening? We were gonna get a deal and we're not. Then we were, and then we're like, and Trump's like, well, we're actually gonna wait till after I win this 2020 election because everyone knows he's gonna win. I mean, isn't that obvious? Aside from that, we're not really like sure what's happening. We're probably gonna get more tariffs. He just placed tariffs on France imports. After France did the tax against U.S. internet giants. So that makes sense. Kind of, that's like a two-way thing. I can understand that. I can understand don't really understand why we're delaying a trade deal. He's just playing mental games. Like, he's just playing games. Problem is, there's a chance he doesn't get elected. So then he won't be the one to get the deal, and the other president will. And what I really want to get into is the impeachment and how that's affecting the markets and what we can learn from how it's affected the markets. So normally an impeachment would increase uncertainty, policy changes, all sorts of things. So the markets decline. I believe for Clinton, and probably for Nixon. Nixon was a little while ago, so I don't actually have data. But I know for Clinton, there was increased volatility, which makes sense. We would see that, and it would make sense to see that now. But really, for the last 3 months, when we've had these impeachment things, nothing's happened to the markets. They've gone up, 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 up. And so that might lead some to wonder, well, why? Really, I think this goes with the uncertainty aspect, is that people feel that, yes, there is an issue, and, we're having these impeachment things for a reason. When it comes down to it, it's not going to affect Trump's presidency. I mean, like politically, it's not going to affect this current term of his presidency. He's not going to get removed. He's not going to, it shows that people have believed that he is here to stay. So there's no reason to get caught up with that. On top of, everything is so built into a trade war. The markets are so overly built in on this aspect of a trade war, or a trade deal, that when we have these other things come in, it's priced out for a trade deal. So if there's no trade deal, we see drops and crazy rises and things like that. And if there's a deal, it goes up, up, up. It's priced in the deal. I said this in February too, I believe. It's priced in for a deal. So when we're not getting the deal, the market's going to go down. But a lot of this other news, as long as it's not slowdown stuff and things like that, we've seen hasn't really affected the markets as much as it typically would, because we've priced in this deal. And if the deal doesn't happen, that's a big issue for the markets. Aside from that, thanks for watching. Happy holidays. Go have some fun today. It's a beautiful day. Watch football. Yeah. Bye-bye.